Now hand over to our first speaker, Tim.
Thank you, Olivia. Good afternoon, everyone. My name is Tim. I'm a partner in the banking and finance team at Harrison Clark Rickerbys. I'm going to be speaking about the main government schemes that have been introduced since the COVID-19 outbreak. Before I touch on some of the detail, it may be helpful to briefly outline the development of those schemes so you can see how we've got to where we are today. At the core of the funding schemes is the Coronavirus Business Interruption Loan Scheme, known as CBILS. This was originally a rehash of the guarantee scheme that was introduced after the 2008 financial crisis as a way of improving liquidity in the debt market, known as the EFG scheme. That scheme has never been widely used due to a number of reasons, but principally the restrictive qualification criteria and the fact that there are only a limited number of lenders that could provide the loans. Understandably, there was much scepticism when it was announced that CBILS would mirror that scheme. There is no doubt that CBILS was launched in a hurry, and it was widely acknowledged that it would need refinement. We've watched the scheme change a fair amount since inception, predominantly as a result of growing pressure on government from the business community. Next slide, please. Turning to each of these schemes in a bit more detail, as mentioned, the core scheme, CBILS, is aimed at UK businesses that were viable pre-COVID, but have lost revenues or have had disruptions to their cash flows as a result of the pandemic. Any business applying must have a turnover of no more than £45 million, and must generate 50% or more of its turnover from trading activity. Loans can be up to £5 million, with a number of banks limiting this to 2 times the 2019 annual wage bill, or 25% of turnover. The government will kindly pick up the tab for the first 12 months' interest and the guarantee fee, whereas under EFG, the guarantee premium was borne by the borrower. Next slide, please. In terms of security and guarantees, the banks can look at the usual options available to them. However, they are not able to take personal guarantees on loans below £250,000, and no security can be taken on principal private residences when PGs are taken for larger loans. One key phrase mentioned above is that each applicant must prove that it was a viable business prior to the COVID-19 pandemic. While the question of viability is one for a bank's credit team to assess, there is also an underlying test within this broad statement, which is derived from EU law on state aid. This says that the business must not be an undertaking in difficulty. What this means is that if a business has accumulated losses greater than half of its subscribed share capital, as at December the 31st, 2019, it will not be eligible for the loan scheme. In practice, this means that certain fast-growth businesses may not be eligible for CBILS, in particular sponsor-backed businesses that use a lot of debt already. As you can imagine, the private equity movements are lobbying this point quite hard at the moment. Crucially, you should note that while the government is guaranteeing 80% of all losses, the borrower remains ultimately 100% liable to repay the loan to the lender. The lender is required to explore all usual recovery angles before seeking recourse to the government guarantee. So this would, for example, include having recourse to a director's personal guarantee if one has been given. Next slide, please. At the same time as CBILS was launched, the Bank of England introduced the COVID Corporate Finance Facility, which enabled the Bank of England to purchase the short-term debt of larger rated businesses through an issue of commercial paper. These are effectively very large businesses that can access short-term debt in the money markets. I don't propose to dwell on this facility, as I suspect it's probably outside of the remit of most of those on this webinar, but suffice to say, between CBILS and CCFF, it left a huge funding gap known as the squeezed middle. Next slide, please. It took a while, but the government then launched CLIBLS, or the large business interruption loan scheme, which is aimed at businesses with a turnover of £45 million and above. It has some similar features to CBILS, but the key differences are loans of up to £50 million are available, but crucially, the government will not cover the first 12 months of interest or fees. Next slide, please. Since CBILS, KIBBLS and CCFF, the Chancellor announced on 20th of April that he is to establish a new future fund to support the UK's innovative businesses currently affected by COVID-19. These are businesses that have been unable to access other government business support programmes because they're either pre-revenue or pre-profit, typically rely on equity investment. The scheme will deliver an initial commitment of £250 million of new government funding, which will be unlocked by private investment on a match-funded basis. This scheme is being developed in partnership with the British Business Bank, with the intention of launching for applications this month. We currently await further details. It will issue convertible loans of between £125,000 to £5 million, subject to at least equal match funding from private investors. Next slide, please. Finally, we have the Bounceback loan scheme, which has only been available since Monday of this week. This will help small and medium-sized businesses to borrow between £2,000 and £50,000. Here, the government will guarantee 100% of the loan with no fees or interest to pay for the first 12 months. Loan terms will be up to 6 years. No repayments will be made during the first 12 months. According to today's Insider, around 69,000 applications worth around £2 billion were approved in the first 24 hours. Though looking on the web, it seems that certain banks have been having, I think, difficulties with their systems. I'm conscious that all the above is a lot of information to take in, and we have developed quite a detailed table setting out how each of these schemes operate and their key terms. If you'd like a copy, please do get in touch with me after the webinar. I'd be more than happy to send one on to you. Next slide, please. So once you establish which scheme you want to apply for, you'll then need to make the application itself, which will, in the majority of cases, be to your existing bank. I've listed a few points here that you need to consider when doing so. Financial information requirements will be substantially the same, with a well-structured funding request, and will be central to the success and speed of outcome. Acting fast remains paramount to meet required funding timescales, given the volume of requests being managed by lenders. Talking to one clearing bank earlier this week, I'd heard that over 20,000 applications were being dealt with, and only a relatively small number of that amount had actually been processed. Make sure you also consider all other government support schemes available, some of which my colleagues will touch on later in this webinar. Banks will want to see that you've obviously considered these options as well. These also include some of the local authority grant-funded schemes. In terms of the amount you're applying for, I think the best advice is to ensure that you're not asking for more than is necessary. If you ask for too much, you may get turned down, and reapply may be extremely difficult or even too late. You should also consider what security is available and keep up to date with the criteria for each scheme, as this has been changing, particularly with the CBILS scheme. Finally, you may also wish to consider advisory services. At a time when management will want to concentrate on running the business, does it actually make more sense to outsource this work, which can be quite time consuming from what we've been seeing so far. Next slide, please. Finally, I just wanted to mention what you should do if you get turned down for one of these schemes. First off, not all is lost. There are a number of other lenders who can deliver each of these schemes, so you could approach them. However, a word of warning here, these lenders are inundated with requests at the moment, and therefore they are predominantly servicing existing customers' requirements first. You should also consider other capital raising options, such as an equity raise, if that's possible. I've again mentioned advisory support. As a firm, HCR has teamed up with a few debt advisory specialists to help support clients through this process, including collating financial information and producing reports in support of loan applications. Please do get in touch with me after this webinar if you want to hear more. And with that, I will pass on to my colleague, Nicola McNeely. Thank you.
Thank you very much, Tim. Good afternoon, everybody. By way of quick introduction, I'm Nicola McNeely. I'm a partner in the commercial team at Harrison Clark Rickerbys. I've been a lawyer for 22 years and I've spent my entire career working with innovative businesses, so businesses that do something interesting and different and who engage in the technology market. I'm the head of technology sector for the firm, so I act for clients across our 9 different offices, effectively everywhere from London, Cambridge, Thames Valley, Worcester, Cheltenham, Cardiff, Hereford, Wye Valley and Birmingham. And between all of those jurisdictions and areas, I help clients along with a team of colleagues to adopt technology and to maximize the use of technology in their businesses. So that's a bit of background about me. What I was proposing to talk to you about today is how technology adoption is accelerating in response to COVID-19, because I think we're seeing some really interesting trends and changes in the market at the moment, which may be relevant to you as individuals, your businesses, and also your customers. Next slide, please. So, why is technology adoption accelerating at the moment, and what are the key trends? Well, one of the main ones you've probably noticed on a personal level, and perhaps in terms of how people are engaging with your business, is the way we spend money. So the way we engage with money, we call fiat currency, is changing. So some of the recent headlines here I'll talk you through. The pandemic will lead to a push for touch-free technology. There is a movement at the moment away from traditional technology, so chip and pin machines, cash machines and the like. People are moving much more towards wearable devices and using mobile payment mechanisms. COVID-19 spurs contactless payment take-up. There's been a huge surge in contactless payment take-up, particularly since the 1st of April this year, when the contactless or tapping technology increased to £45 per transaction. UK cash withdrawals plummet during COVID-19 lockdown, so the use of cash has reduced by 60% in just 8 weeks, which is pretty phenomenal. Central banks are urged to create digital alternatives to cash. This is effectively to allow people to use central bank supported digital currencies to make payments rather than using traditional payment mechanisms. Libra begins journey to regulatory support with multi-currency model. So this is the consortium led by Facebook that you may well have read about and be following, which is looking at individual currency and also multi-currency models for digital currency. And interestingly, a different angle on it is Age UK, the charity, has been calling on the Financial Services, Financial Conduct Authority to make sure that elderly have access to cash during the pandemic, because we have a difficult dichotomy of an aging population that don't engage with technology and don't really understand how to engage with contactless payments and electronic payments, mobile payments and the like, because they don't use mobile phones in the same way that you or I might. And then you have early adopters. So you have young children that will use mobile payments, will use wearable devices on a day-to-day basis. And there is a difference between those two in terms of consumers and how they engage with cash and how they make payments. So there are some potential issues in terms of making sure that physical cash is still available for those who are vulnerable. And that's not just the elderly, that also includes people on the poverty line as well, who are paid benefits or receiving universal credit, because they tend to use cash more than cards because they can't get credit. Next slide, please. Thank you. So, what I wanted to mention now is some of the changes that we've been seeing in terms of how we engage with the NHS and medicine. Now, we've seen some changes in trends, not just with GPs, but also with vets, dentists, pharmacies, opticians. But I've got some statistics here around GPs and telemedicine, which I think is really interesting, because there's in such a very short period of time, in the last 8 weeks, we've seen a complete shift in the use of telemedicine. So GPs are seeing 7 in every 100 patients face-to-face since coronavirus hit, which shows a complete shift in online and telephone appointments across the UK. So to compare that to where we were last year, or just 2 months ago, fewer than 1% of appointments were via video link last year, 80% were in person, and compare that to now, 7%. So there's been a complete change in how people engage with the NHS because of social distancing measures. There's also been increased use of AI chatbots, so artificial intelligence chatbots, to signpost people to specialists for everyday medical advice, diagnosis and treatment. So the use of this technology is growing in popularity, and I think that trend is likely to increase. Next slide, please. So what issues do we need to resolve before we use remote and telemedicine services and technologies like these more frequently? There are lots of issues we do need to address, and we've had to rush into adopting this technology very quickly, quicker than most would like. But there are legal and regulatory restrictions because remote medical testing can be complex. Ownership and control of patient data. So how is the data recorded? How is it used? Who gets access to that data? Is it secure? Cybersecurity, all of that. Tracking and control of patient prescribed medication as well on a global basis can be really complex. So what you don't want is for people to have multiple prescriptions and then have overdose issues, which has actually been a big issue in the US with methadone. So I've got a thought here for you on blockchain technology. So blockchain technology is potentially very revolutionary in terms of what it can do around medicine and pharmaceutical data, because what the technology does is it enables you to have one single version of the truth, which is accessible instantly and globally, regardless of where the patient is. So if people are displaced, their medical records are still available, and they're available to their GP, to their surgeon, to their dentist, to their doctor, to their optician, to anybody who needs that data. And quite often there are difficulties in terms of how we provide medical services because of that lack of consistency and lack of accuracy of medical data. So I think blockchain technology will emerge as one of the winners in terms of making sure that we have that accurate picture of people's medical history, and people can hopefully gain control of their own medical data and how they share it and how they use it. But that again is a complexity that needs to be looked at from a data management perspective. But the benefits of this technology is it means frontline workers have access to that data immediately, even if the patient is unable to share it with them or tell them. So I think technology is going to be really, really helpful in terms of how we move forwards and how we emerge from COVID-19. We've also seen lots of large tech companies step up to the challenge and to help in terms of the efforts for fighting the COVID battle. And I think even small technology companies have been able to add value. So technology is quite powerful, and I also think it gives us a huge opportunity in terms of a business generation and business growth to use technology to enable our businesses to grow through what's going to be quite challenging market conditions for the next 12 to 24 months. Any questions about technology or technology adoption, software, digital transformation, which a lot of this is, then please reach out to me. I'm very happy to have those questions now or to follow them up independently. But if not, I'll pass you along to my colleague, Rachel.
Wonderful. Thanks, Nicola, and thanks, Olivia, and to the Chamber for having us today. It's great to be a part of this webinar. My name is Rachel Roberts. I'm a partner at Harrison Clark Rickerbys in the Employment and Immigration team. So that means I deal with everything personnel related. I've got a particular interest, I guess, in the sale and transfer of businesses, post-termination restriction work, and business restructure and reorganisation. So that's quite handy in the current climate. But now, as you can imagine, my professional life is the F word. Now, I know a lot of you probably weren't expecting a talk on furlough today, but given that we weren't able to have an EIS specialist here, we thought the F word was the obvious choice. So yes, I'm going to talk about furlough for a little bit, but I'm also going to talk about ideas out the other side of that. The good news is I'm not going to make your brain hurt, because mainly the government haven't given us any law. So my sort of objective today is just give you some ideas, roadmaps, and how we can help. Okay, so for me and for many others, I'm sure, furlough is a word we hadn't heard of 2 months ago. It's got no actual legal definition, and all we have to go on is government guidance. And I think we're on about reiteration 10 of that as we speak. We do also have a Treasury directive, but I'm sure I speak for everybody when actually, based on that, we've got about 4 million workers currently who have been furloughed in the UK, with probably an estimate of that being around about 9 million by the time the scheme closes. So 2/3 of UK businesses are actually using the scheme. So I'm sure most of you have probably considered it, or if you haven't, you're probably operating within the scheme already. So where are we with the scheme? Well, we've got the government guidance, we've got the Treasury Directive, and we've got the Coronavirus Act 2020, and these all underpin the job retention scheme. But the key point for me and the takeaway for you is that with furlough, we are in uncharted waters. The decisions will vest very much with the Treasury, and all I'll say is that they're just very unlikely to look favourably on businesses who are trying to come up with creative solutions that go against the spirit of what the job retention scheme is intended to achieve. So just want you to be mindful that if you are furloughing staff, that you are taking those steps to protect your business. You do not want to be faced with a situation where your claim gets denied, or you have to repay employee salaries and haven't had them working under the scheme. And for me, the obvious example of that is that if you don't have evidence of employees' agreements to being furloughed, could present difficulties down the line. And that's tricky for me, because I'm not normally unduly risk averse. I'm very much about managing risk and reward, but because here all the power of the interpretation invests with the Treasury, we are very handcuffed as employment lawyers to give you that absolute categoric say so. So just bear in mind, it's probably not worth making a bet against the guys that are determining whether your bet is valid. That's all I'll say. The latest guidance was issued on the 1st of May, and I just want to highlight that in that guidance there was a greater reference there to preventing fraud. HMRC will be checking claims that are looked to be dishonest, based on inaccurate information or fraudulent, and they're not going to hesitate to withhold payment or order repayment. And if that's not enough, there's also a portal being set up so that suspected fraud can be reported directly by the public or even your own employees. And what this really means to me is that the government are very alive to the prospect of the scheme being abused. And to the extent that they're going to curtail those claims, I don't think we can predict at the moment. So again, I just urge you to stick to the letter and spirit of the guidance when you are undertaking any furlough. There are also a few, just moving on to my second point there are a few unknowns still. We're still waiting for some more clarity on holiday. So does taking holiday during the furlough period reduce the period of time spent on furlough? So we know we've got to furlough staff for a minimum of a 3-week block. If they took a week's holiday, does that mean they've only been furloughed for 2 weeks? So those questions are still up in the air a little bit, as are a few around sick pay and whether someone on SSP, statutory sick pay, can be furloughed, or whether they would have to wait till that SSP comes to an end. So we're still waiting for some guidance on that. I think we have to be mindful, obviously the government is finding their feet. Employment law is complex, and quite often you disturb it in one area, a bit like the weather, you get a rainfall in another. So we just, I think, need to bear with them in that regard, and it's probably likely to be months before we get a clear picture. Although I will say, I think the prevailing view in the legal community from my channels is that the government is likely to be forgiving if you're working again within the spirit, and it's actually the guidance and the interpretation of that guidance that's actually caused the problem. And then just the last point there, I just want to make the point that the scheme does not change employment law. So I think we all know you cannot force an employee to be furloughed, and equally they can't force you to furlough them either. But just stick to the parameters of your employment contract and seek to agree any changes. And remember that the laws of equality protection will remain for all members of staff, and therefore it stands to reason that you certainly cannot furlough all the women in your organisation and ask all the men to work. We are seeing claims emerging around the selection for furlough and equality, so we watch this space and anticipate those to be quite busy in the tribunal in probably about 18 months' time. The best advice I can give you there is really just follow the guidance, listen to your workforce, and sense check your decision making with me, with a member of the team, with somebody else. It's got to be the only way we can do that in such unprecedented situations. So just moving through there to my next slide, please. I just want to look at a little bit of life after furlough and some exit strategies. I'm sure a lot of you are probably thinking about this. The scheme's due to come to an end at the end of June, maybe extended on limited basis. But I think we need to start thinking about plans we're going to be putting in place for life after furlough. Needless to say, I think these are going to have to be as agile as possible because things are going to shift on the ground on a daily, weekly basis. So just a few thoughts there. So first of all, can you just open your doors and return to normal on day one? So 1st of July comes, everybody comes flooding back. I think that's probably, albeit the most desirable option, is probably the most expensive. You'd need to give your employees notice of them coming back, and you'd certainly need to spend a bit of time now just considering any specific procedures and policies you want to put in place before doing so. And we now know from Tuesday evening that the government have got some draft rules, seven draft rules on UK workplaces to ease lockdown. And I suspect this will feature very heavily in Boris's speech on Sunday. But the guidance is essentially there to set out how various workplaces, it's got factories, restaurants, office workers, it covers various sectors, how you can reopen with safety measures in place. And the key one that I've pulled out for me is the fact that if you employ 5 or more people, you will have to produce a written risk assessment of your working conditions for staff if you want to reopen. And again, we imagine that being a very live-in document that will move with your business on a daily or weekly basis. It's also clear from that guidance that those that can work from home should continue to work from home. And there are also lots of other tips and options in there, such key measures like staggering start and finish times, adopting one-way systems for enter and exit buildings, and keeping personnel consistent on shifts so that there's less, obviously, transfer. And I have to say again, we've actually seen a little shift in COVID-related claims in the tribunal in relation to health and safety and whistleblowing. So again, we will have to watch this space in 18 months' time and anticipate being a little bit busy in that regard. Okay, so for me, that there means that you will need to consider a tailored policy. So you'll need to look at the government guidance. Those, hopefully one will relate to your business, but there's some generic guidance if not. Consider your own work practices, the legislation in a very specific COVID context. And for me, that means probably a bespoke COVID policy. Okay, another option there, just point two, is you could consider asking people to come to work, not reducing headcount, but trying to make cost reductions. Some options there would be pay freezes, pay cuts, reducing hours of work, changing shifts. A lot of these will rely on what your contract of employment says. Do you have a layoff clause? Do you have short-term working clauses and the right to vary the contract? If not, you will have to agree those with your staff. Some more novel ideas I've seen bantered about a bit is extending furlough, even though the government scheme's not in place. So agreeing an amount, maybe it's 50%, 40% that you pay staff, and just continue to keep them on furlough with agreement. But obviously you're picking up the bill for that. Or offering unpaid leave and sabbaticals is another one. And then lastly, I have to say the R word. Key for me with redundancies is your consultation and your timings of that. It must start your consultation in good time to allow relevant discussions to take place. Obviously, that's more difficult when you're having to do that via Zoom or Skype. But the key consensus is you can consult whilst staff are on furlough. There are minimum periods if you're dismissing collective amounts, so 30 days if it's between 20 and 100. If you're dismissing 100 and more employees, it's 45 days. So we would need to start that consultation pretty soon. If it's less than 20, then there's no minimum period. And there are heavy penalties if we get that wrong. So a plan for any redundancy is important. And then just moving on there to my next slide, please. Brilliant. I just wanted to touch on here, life after lockdown. Just a few thoughts as to what your staff morale might be like. I'm sure those coming back from furlough might be a little bit demotivated. They might not be, might be jaded, but let's think about ways that we can support them coming back into the business. I think if you don't have policies or procedures in place, such as a home working policy or your flexible working policy is not up to date, then now's the time to look at those. And generally a new operating procedure in light of Boris's guidance notes for easing lockdown on Sunday will probably follow. Also, you're going to be providing staff with PPE. I think there are going to be some difficult members of staff that might ask for PPE, even though your risk assessment might not have identified that they need PPE. Are you going to be able to provide this? What does your risk assessment say? Social distance policy. I think you might need one of those. Are you realistically going to be able to keep people 2 meters apart all the time? So think about that. And then just difficult staffing issues there. I think that we're all going to be faced with some people that don't want to return, have childcare issues, or won't come back because you don't have the PPE in place. So just kind of having some forethought for those could be useful whilst we don't have to deal with them on the ground. And then lastly, just set out there, and I won't pick up this, just how we can help you. Sorry, just moving on there to my next slide. It's just how we can help you there with some of the ways. The key thing for me is just pick up the phone, sense check your ideas. We've given you some ideas. There's lots of other ideas I can share with you, and we can help steer you through what is the unknown F word. Okay, Brilliant. So that's all from me. Thank you. I think I'll hand you back to Olivia and see whether we've got any questions.
Thank you very much. Oh, thank you so much to Rachel, to Tim and to Nicola. All really, really interesting stuff. And we have actually got some questions in the group chat area. Can all three of you see the questions in there? I think the first one was actually from Nicola, probably to Rachel. Do the three of you just want to unmute yourselves and address those questions?
Great. So, okay, so what form should the employee consent take? Is there a particular form of wording required? No, there's not at the moment. What we're saying is that an email will suffice. So you typically, what we're saying is you write to the employee setting out the parameters of furlough and whether they agree to that, either ask them to sign and return that letter or send you an email to confirm their acceptance. But that seems to be enough at the moment, but there's no particular guidance as to what form of wording is required.
Okay, thank you, Rachel.
The best case solution there, best case scenario.
Thank you. There's one from Steve. I'm not sure if that's to Tim or to Nicola.
That's for me as well.
Oh, you again, sorry.
So, yeah, will we need to change our contracts of employment to include the possibility of furlough in the future? That's a great question. I've already done that for a client. I've already amended their director service agreements to say that in the future, if furlough or any other option is there, that they will consent to that. What legal effect that will have, I'm not quite sure, but yes, it's very clever and a possibility. Having said that, I think this is unlikely to happen again, isn't it, in the foreseeable future? So who knows? Yeah, exactly, Steve, who knows? So yeah, great idea, and why not?
Thank you, Rachel. The next one's from Linda. It's about the Bounceback loan. Is that a Tim question, maybe?
Yeah, that's probably me, I think. Yeah. No, it's a good question, Linda. I haven't seen anything on the British Business Bank website setting out any end date, really, for the availability of Bounceback loans. All I have seen is some commentary on one of the websites recently about the fact that it's possible to transfer a CBILS loan for under 50,000 to a Bounceback loan up until, I think, the 4th of November 2020. Now, I don't know where that date's come from, and I can certainly find out some more information for you on that, but we're certainly looking at a few months hence at the moment, but I'm not sure about a specific date. But I can certainly come back to you on that if that helps.
Okay. Thanks, Tim. Another question from Andrea about the 7 draft rules.
Yeah, Andrea, they are not actually available to view yet. So there's only various articles in the Telegraph, Times, BuzzFeed, where I've taken my information from at the moment. So there's just snippets of leakage at the moment of those rules. So see what you can find. I would just Google 7 guidance ease lockdown and you'll get the notes, but that's as much as we've got at the moment. I think they might be released on Sunday after the speech.
Okay, thank you again. Oh, Linda again for Tim.
I think, having read up on some of the grant schemes then that are available, a lot of them, in many cases, you would be contacted directly, I think, by the local authority. I know there's the retail leisure grant, hospitality and leisure grant, and there's another grant scheme available as well. Certainly, your best port of call is your local authority, I believe.
Thanks, Tim.
Okay, yeah, thanks again, Tim. Sorry about that. Elaine's got just a point for Rachel, just about sharing the rules when they're available.
Yeah, we'll have a link because we're currently drafting an article on our advice to businesses after lockdown, things we're thinking about and seeing our clients operating. So when we'll release that article, and then we'll probably release it again when the 7 guidance notes are released, and we'll attach a link to those notes. Absolutely.
Okay, amazing. Thank you very much. Last chance for any questions or comments then. Hope you found that useful. I'll just leave everyone for a minute just to type up any questions in case they've got any. But remember, obviously, this will be recorded and put on the Chamber website and on our YouTube channel if you do want to go back and catch up on anything and have a recap. Last chance for any questions or comments. Okay, I'm going to go with then a thank you to all three of you for giving up your time this afternoon. Nicola's just mentioned that you've got a COVID-19 hub with lots of free content on the Harrison Clark Rickerbys website, so we'll make sure you have a little look there. If anyone wants to be put in touch with any of the speakers directly, drop me a message and I can pop you in touch. Georgia said thank you, brilliant information. So yeah, thank you so much, guys. Oh, I'm sorry, we actually just got one more from Linda. It always happens, I just about finish and then we get one more. It might be for you, Tim.
I think it is, yeah. We had a viable business before the virus, but anticipate that our business will not be viable going forward now. Is there funding available? Well, that is predominantly why these schemes have been brought in for businesses that were viable pre-COVID. So I think if you haven't already done so, you should be talking to your bank, I would have thought, Linda. But by all means, if you want to get in touch with me directly afterwards, I'm sure I can help you, point you in some directions that may be helpful.
Thanks so much, Tim.
Okay, thanks, guys. Steve, you put Q in there. Does that mean you're getting ready for a question? Do you want to ask another one? Was it just a mistake? Shall I unmute you? Did you want to ask a question, Steve?
No, it's my acronym for thank you.
Fantastic.
I like that.
Yeah, me too. That's great, everyone. Then thank you so much to all of you guys from Harrison Clark Rickerbys for giving all of that information. It was all really useful. So again, thank you very, very much. Really appreciate it. I look forward to seeing you all again really, really soon, hopefully. I hope you enjoyed a lovely sunny bank holiday weekend, and thank you so much for attending. Bye, guys. Thank you.
Thank you.
Everybody, have a good weekend. Bye-bye.
Thanks. Bye-bye.
Bye-bye.